Good afternoon, everybody. Thank you for being here. Truly appreciate it. And with Amit having fun at AIPCon, I figured I'd step in and keep everybody entertained. But before I do me a favor, read the disclaimer. Unlike this morning when I did it a little bit after the fact, I am not a financial advisor. I have no idea what your situation is. Please take everything I say with a grain of salt. Always do your own due diligence. Thank you very much. Star, what's going on? DeFool, what's going on? I'm Beneficial, what's going on? KK, Rambler, PB, Shells, Rusty. What is going on, everyone? Matthew, thank you very much. Appreciate it. I do it for the community. Very happy to do it. Thank you very much. Truly appreciate that. So, market is in shambles at the moment. And I was paying attention to the chat. I got to tell you, this is, for me, the reason I'm not scared is because I keep buying the S&P. I think that is the easiest way to not go crazy in these markets. We can't control what's going to happen overseas. And look, we have new information. 19 minutes ago, new Supreme Leader says Strait of Hormuz to stay closed. Israeli military says it's begun a new wave of attacks in Tehran. Israeli Prime Minister Benjamin Netanyahu is going to hold a press briefing. 40 minutes ago, it looks like reports came out that Israel struck Beirut, which signals a long campaign. Never good. Looks like U.S. and its allies are clashing with Russia and China over the Iranian nuclear program. There's a lot to digest. A lot to digest. And when I check the oil markets, oil's surging 10%. It's never good. So Brent is currently over 100. So let's get this up on the screen. I'm expecting the markets to be choppy for a little bit at this point. This could turn into the black swan event nobody saw it coming. I hope it doesn't. WTI is flirting with 96 right now. It's up 9.85%. Brent, just over 100, approaching 101, up 9.7%. June, what's going on? Lisa, what's going on? Jacker, what's going on? I pronounce your name wrong every time on purpose, just because of the comment you made a couple weeks ago. Anyway, oil markets are going up. It's going to put a lot of pressure on the Fed, I think, if this stays higher for longer. I don't think there's any question with that. Right now, the market down a lot. So, oh, Rusty, you're too kind. Thank you so much. Too kind. So you have the Dow down 681 right now. We are very far away from the 50,000 that we hit. The Dow is now under 47,000, 46,736. The S&P down 1.5%, 66.76, well off the 7,000 that we touched. The NASDAQ down almost 2%. It's down 393, 22,322. Community favorite stocks, even Apple's down. 2 billion unit install base, 100 billion reoccurring revenue from services run rate this year. Apple's down over 2%, 255. You got Broadcom down almost 2%, 335. BM&R down 2.5%, 2052. Salesforce under 200, still up on the day, under 200 though. CoreWeave under 80, 79.90. Ethereum up just a little bit, 2070. You got Hood down 3%. We got Meta down 2.5%. Meta's down $17 right now. Microsoft down 0.5%. Nebius down 3.5%. Service Meow, as Matt would say, down 2.7%. NVIDIA 183, down $3 right now. Oracle turning red, 2.5% down. We're under 160, 159.31. Palantir's holding strong, up 1.3%. QXO is under 20, down 8% today. And there's really good reason why. Oil can make all the input costs go up, can make their margins contract because transportation costs are up. Not good. SoFi, a lot of people complaining about it, down 4.5% right now. 1768. Tesla, under 400, down 2.8%. And Zeta holding strong over 18. Holding strong. 1803. And we got Adobe earnings coming up in a little bit. So the market still open for 10 minutes. The question is, did anybody do anything interesting today? I am not the new Amit. I'm just filling in. We're going to have a good time. Try to keep everybody entertained. Can't do nearly as good a job as Amit does. We're going to put our best effort in. So did anybody buy anything today? CF and NTR, two things I don't know. Adobe all in. Yes, Amit's looking different. Shorter hair. Melee. A lot of people like Mercado Libre. I don't know. It's hard for me to get into. The numbers did look good when I looked at it with Ned Flanders, a.k.a. Tanner. Man, you guys are awesome. The chat's moving so quick. It's hard for me to read everything. GDXU, I'm not sure what that is. Why do they call him the milkman? I drink a lot of milk, and William painted a portrait of me holding a baby cow. It's behind me over my right shoulder. It looks like my left shoulder to everybody on screen. Tanner Flanders. I like that. I do like that. Tanner Flanders. Oh, bought SoFi. Look at that. I like it. I don't hate it. SoFi under 18 is very interesting. Amit got gray. Yeah, I know. A lot of gray in the beard. I know. Rolled a few things. Reddit down 4%. Yeah, I was busy all afternoon, so I didn't get to put any buys in. Ooh, Reddit's full. Why? So Reddit gets $20 million fine in the UK for alleged unlawful use of children's data. They also tested a new AI search feature to show shopping suggestions. You know how I feel. Reddit looks interesting on the numbers. They also had a director buy 7.48 million worth of shares. We will do a full deep dive on it. Can I interview Grogu, aka Baby Yoda? Maybe one of these days. Maybe one of these days. Dookie Pie's here. Chevron. Where is Chevron right now? Ooh, up 3%. I like that. Lena, what's going on? Listen. Chevron 197.55. I like it. I'm in it. I'm in it with you, Dookie Pie. Been in it. Ginger took profits on Devon Energy. I like Devon. Good company. I haven't looked at it a little bit, but good company. QXO is really interesting here. I think we need to see what happens tomorrow and next week. Hollis is here. What's going on, Hollis? Look, QXO can keep going down. This is a company that's going to live and die with the oil trade at the moment. The home builders could get scared. Renovations could get put on hold. We need the Fed to keep cutting rates. Right now, if CPI consensus estimates increase, that could put pressure on the Fed to not cut May and June and push cuts out. That's not what we want for that trade. So I would pay very close attention to the oil markets if you're interested in QXO. It's all about home builders. It's all about renovations. Poor Tanner with his SoFi. Well, poor a lot of us with our SoFi. Listen, I'm not blessing anybody with my presence, Lena. You all have free will. I'm just happy to be here to entertain everybody. I don't follow UNH, so I can't give you any insights on that. I don't have the bandwidth to understand the healthcare market like that. All right, the Dow just crossed 700. The Dow is down 703. QXO. O is an Oscar. QXO. The S&P down 101.79. The NASDAQ down 400. This is getting a sea of red. But when a sea of red happens, when there's blood in the water, there's likely some good opportunities. It's a matter, are you investing in anything for the week, for the month, or for the long term? For the long term, I think we're fine. 3.5 minutes. I do have a bell. Don't you worry. I do have a bell to close out the market. And we're going to get Adobe earnings in a little bit. See if there's any new news. No new news. So Red Cat, CEO says drone attack on California could be easily intercepted. Occidental Petroleum, ticker symbol OXY, is up 5%. They got 2 upgrades. They got an upgrade to 69 from Wells Fargo and 66 from Piper Sandler. Oxy's trading at 58.40 right now. Yeah, let's see what Adobe's doing. Yeah, I wouldn't say that's deep red right now. It's down 1.5%. It's down $4. Adobe's the one that I'm worried about in the AI space. It really is. I just don't know enough about their enterprise platform where I feel Adobe can be disrupted by AI more than a ServiceNow or a Salesforce. I could be wrong. It's going to be interesting to see the numbers. The street is expecting that they are going to do 587 in normalized EPS, 456 on GAAP, and then 6.28 billion in revenue. So we will see what happens very soon. It's 3:58. God, 1.5 minutes to the market closes. Where are we? Oh, man. Dow keeps plummeting. 737 we're down. S&P 103. NASDAQ 406. What's with all the gray? I'm not that gray, am I? I don't know. Could be the oil markets. Got less than a minute. We got less than a minute, everyone. The Dow is about to cross 750. It's down 749.56. It's about to cross 750. The S&P is down 104.98, and the NASDAQ is down 410.01. Bad day today. Very red day. Hopefully it's not scaring people off. I mean, there's some really interesting opportunities out there. And this is going to get sorted out. It just depends when at this point. Dookie, I do not use hairspray. You know I do not use hairspray. I've proven this time and time again. Milkman on a red day. About to ring the bell. It's closed. 4 o'clock. It's closed. 735 on the Dow. 101 on the S&P. 396 on the NASDAQ. No bueno. No bueno. No bueno. I don't have a cowbell like Amit. We'll look into getting one. We will definitely. Shortest bell ever. I mean, low energy bell where you want me to be excited about the market being down this much and people dying overseas. We can't be excited about that. We cannot be excited about that. If anything, I should have done it like this, because this is nothing to be excited about. I should get a car horn to honk because of the amount that I freaking honk at people when I drive. I agree. And it is the Temu market close. Listen, I can't replace Amit. We all know I can't replace Amit. All right. Adobe is reporting soon. We are going to stay up on the Adobe news. That's the big one that is going to give us a lot of information about what's going on with SaaS. This is the one a lot of people are worried about. So let me get on Adobe's website. Listen, a Mick replacement. Yeah, my hair's been like this all day. I also have not gone outside, okay? There's no hairspray. This is just my hair dries like this. I comb it, and it dries in place. I don't know what to tell you. All right. Adobe newsroom. We want investor relations. All right, we are waiting for the site to be updated. It is not updated yet. What is Adobe? Adobe's up after hours. Adobe is up after hours, everyone. It's up 77 cents. See what happens. We will see what happens. Steve is actually from Peaky Blinders days. Listen, Peaky Blinders, great show. Great show. Why do you want me to get a do-rag? There's, for the 100th time, thanks, Dookie. See what you're doing to the chat? My hair legitimately dries like this. It legitimately dries like this, okay? Like, I don't know what to tell you. You guys are going to make me order a do-rag. That is not happening. I got to tell you, the community is amazing. Everybody in the community makes me laugh. You guys are great. Absolutely great. Absolutely great. All right. Adobe, we're still waiting on it. Not out yet. It's kind of just fluttering around. Let's go to CNBC. There was something, I don't know if anybody got a chance to see this. Perplexity CEO was on CNBC. I specifically did not watch it yet because I wanted to watch it with everybody and talk about it. So let's see what their CEO has to say.
Developer Day, rolling out more than a dozen new products. And joining us right now in an exclusive interview is Perplexity's co-founder and CEO, Arvind Srinivas. Good morning to you. A whole bunch of new products, including some that have come out prior to yesterday, but others as well. Help us understand sort of where Perplexity is going and what Perplexity is doing differently, for example, than how we should think about it relative to some of the large language models that you rely on underneath the service.
Great to be back here, Andrew. So Perplexity, since the launch of computer, we like to say everything is computer. We introduced Perplexity Computer, which is a massive multi-model orchestration system. And just by virtue of that word, the difference arises from all the model providers. A computer is not just one model. In 2026, or towards the late 2025, models started specializing rather than commoditizing. Anthropic is very good at coding. OpenAI's models are very good at writing. Google's models are very good at multimodal. So when you are at a computer, and if you just want to emulate whatever you do as a human being on a computer, whatever digital task, if you want to give AI access to exactly the same set of tools, file systems, and sandboxes, you need all models.
Okay, so we're getting people in the chat saying that Adobe's Q1 earnings are out. I'm not seeing them anywhere. I'm on their website. I'm on Seeking Alpha. Where are you seeing it? Unless you're on a Bloomberg terminal, tell me where they are, because I'm not seeing it. They're on X. They do this to Amit. Is it not out? I mean, I am legitimately on the website. I'm on 3 different sites looking at it. It just swung negative. All right, let's go to X. Let's see if we can find Adobe earnings out on X. Yeah, I'm not seeing it, everyone. All right, we're going back to the video. Once I get the actual numbers, we are going to go through them.
To be able to do the entire work, which is where Perplexity shines, because our focus from the beginning has always been on accuracy and orchestration. We want to be the...
All right, they are actually out. We will come back to this. I have them. Give me a sec. All right. Adobe, double beat. We got non-GAAP EPS of 606, beat by 19 cents. Revenue, 6.4 billion, up 12.1% year over year. Beat the consensus estimates by $120 million. Let's go through the release. Total subscription revenue and RPO increased 13% year over year. Record Q1 operating cash flow, 2.96 billion. Okay. Adobe achieved record revenue of 6.4 billion in its Q1 2026, represents 12% year over year growth. Adobe repurchased 8.1 million shares in Q1. Total customer group subscription revenue was 6.17 billion, 13% year over year. Business professionals and consumer subscriptions revenue 1.78 billion, 16% year over year. Target revenue Q2 2026, 6.48 billion on the high side. All right. Good operating income, 2.4 billion. Basically no interest expenses. Net income of almost 2 bill. This doesn't seem like a company that's in shambles or distress. I can tell you that much. They have like no debt. $849 million. So that was in current. Long term, 5.3. I gotta tell you, I'm liking this. What's Adobe actually doing though? Let's see. What are they doing after hours? Adobe down 5.6%. They're getting hammered. What did the street not like? Their freaking guidance? I mean, the earnings were not good enough, and the guidance must not have been good enough, even though it was a double beat. Let me see what they have on their website. Do we have a deck? Their website's not updated yet. All right, this is something we need to listen to the earnings call. It's got to be guidance. I mean, this is down 7% now. 251. So decision to transition. I'm going to butcher this name. Shantanu Narayan, who has served as CEO of Adobe for 18 years, has decided to transition from his position as CEO after a successor has been appointed. He will remain chairman of the board. The board of directors has appointed Frank Calderioni, lead independent director of Adobe. Oh boy. Earnings call will be at 5 p.m. We have a little bit of ways for the earnings call, 5 p.m. So a combination of guidance and a CEO transition is rocking Adobe. Look, the numbers were good. People are, I don't know. I still think the SaaS thing is overdone. Adobe was the one I was worried about. And now crude WTI is over 96. It's up 10.34%. 10.34%. Crazy. Crazy. CEO knows what's coming. AI takeover. Look at Rubrik. All right. RUBRIK. What is this? Up 4.5%. Double beat. Rubrik non-GAAP EPS of 4 cents, beats by 15. Revenue 377.68 million, beats by 35 million. 46% year over year growth. Big growth. Full year outlook. Subscription ARR between 1.83 and 1.84 billion. Revenue 1.6 billion to 1.61 billion. So they're growing guidance. Free cash flow to come in between 265 and 275 million. I don't know enough about Rubrik to give you any intelligent information on it. It's not something I follow. All right. So now is Adobe spilling over into the others? So Salesforce was up. Salesforce is giving back some of today's gains. It's down $1.18. Let's see if Service Meow, what it's doing. Down 90 cents after I was down to 112. Adobe, where you at? Adobe, $17, down 6.32%. No bueno. No bueno. And Brent is settling above $100 a barrel. That's just not good. Oh, look at Kathy Hochul. Amidst the exodus of New Yorkers to sunnier tax climates in Florida and Texas, quote, New Yorkers are exasperated. They feel that everything's stacked against them. They're not getting ahead. Their rents are too damn high. Their childcare costs are high, et cetera, et cetera. See how that unfolds. A lot of people probably don't care about that. You know what? It looks like Mr. Patel is tweeting. We're gonna see if we can get Mr. Patel on. I'm gonna hit him up on WhatsApp. Let's see if he wants to come on. All right, send Chris a link. We'll see if he comes on or not. AI killed Adobe, man. It's certainly looking like it. So Adobe's starting to come back a little bit. Not much. It was at 15, down 15. Now it's down 16.49. All right, Ulta reported today. Not something I really follow, but let's see. Oh my God. Ulta Beauty. The hell happened here? Down 10%, 63.70. I don't follow this. Let's look at what happened. Gap EPS missed 2 cents. Revenue grew 11.5%, beat by 70 million. Oh, this is ugly. They returned almost 900 million in buybacks. Whew. How many of you were in Ulta? It's not something I don't think a lot of people I know follow Ulta. Yeah, I didn't think a lot of people were in it. It's definitely something we're going to check out if it keeps falling. I can tell you that. Elf. I looked at Elf a while ago. Elf was interesting. I haven't kept up with it. All right, so it looks like Adobe's settling down around 5.5%, 6%. I mean, it's going to be really interesting to see what they say on the earnings call, but this is the problem. We're probably not going to know where the chips fall for a while. I mean, it's not like Adobe is not growing. They're still growing in the low double digits. So it's hard to really make a fair case that Adobe is being impacted by AI if they're still growing. The question is what happens in a year from now? And that's the thing. I don't think anybody really has a good idea. Intel may be interesting. Yeah, I mean, this could be just a reaction to the CEO stepping down. That could definitely be it. Hood just posted his February metrics, 7.4 million funded customers. That's great. How can I call Steve? I'm live. You know what? We'll call Chris though. We'll see if Mr. Patel is around.
Hey, Steven, what's up?
Chris, you're live. Would you like to come on?
Not really.
Okay. Well, if you change your mind, you have a link in your WhatsApp. Everybody told me to call you since I'm filling in for Amit.
Okay. Yeah, no, I'm good. You know, just trying to just read through some earnings and stuff and going through Adobe's earnings and just looking at data for private equity.
Well, they all want you to come on. We're going through Adobe. So if you want open invitation, you have a link in your WhatsApp.
I appreciate it, but I think I'm just going to try to just sit back and read. Their CEO basically is retiring. So they have new leadership. So like I said, I'm going to be on the call in a little bit and just, like I said, go through all the numbers. They had a great earnings. So
yeah, the earnings were good. All right, I'll let you get to it.
Later.
All right, so Chris is getting ready for a call, so he cannot come on. He's going through all the earnings for Adobe. Listen, he even said that he thought it was a good quarter, same as me. So Ned Flanders, you guys want me to call Ned Flanders? Hold on. Ned Flanders is not picking up. He may be shooting a video. We're not calling Amit. Amit is at AIPCon. We are not calling Amit. No signal in the sauna. Oh my God, that's hilarious. No signal in the sauna. That's great. Love it. Love it, love it. Love it, love it. I don't know where Maddie Money is. All right, Adobe's starting to fall a lot more now. Down $17.5, 6.5%. Difficult. I cannot wait for the earnings call. 5 p.m. Ghostbusters. Great movie. This does not look like AI is cannibalizing Adobe, though. That's where I'm getting confused. Call us in a pizza? Oh, boy. Oh, boy, you guys are crazy. All right, let's get back to, I want to see what the Perplexity CEO said. So let's go back to that for a minute.
Orchestra conductor across all these different models.
Arvind, I've tried to explain to people what computer is. For those who have not used, it's one of those things where if you use it, you can feel it and understand it. Much harder to describe. I've told people, it's a little bit like OpenClaw without some of the security bugs and things like that. But then they say, well, what does that mean? Can you sort of just explain it in the simplest way you can?
Sure. Think about you, Andrew, when you open your computer to do your work. What are all the things that are actually needed. Ignore all the AI models out there. You need a browser. You need access to the internet. You need a file system. You need to keep, there needs to be a place where you store all your files. And you need a way for programs to run, your shell or your terminal. You may not have to even look at it, but there are programs running in the background. If you put these three things together, you have a computer ready to go. This is actually the idea behind some of the things like Chromebook, which try to put just these three essential things inside a computer. Now, if you want an AI to do all the work you as a human being do on a computer, but except it's running securely in some server in the cloud, if you put these three things together and pair them with LLM models, which do the orchestration, you essentially get a digital worker on the cloud that's running securely on a sandbox with all access to your personal data and persistent storage. That is essentially what computer is. And you brought in OpenClaw. The main difference, as you said, is security. It's all running on a server side securely, does not go override your files, does not import malware from a skills hub somewhere on the internet, does not have, you don't give it full access to all your messages if you don't want to. So all that controls security, and the fact that Perplexity has its own common browser, so we can do agentic browsing on your behalf on the server side. These are the major differences from existing like hobby projects like OpenClaw.
Here's the thing that I can't understand. Long term, look, OpenClaw is going to OpenAI. I'm imagining everybody's going to create their own version of something that looks like computer.
Yeah.
Now, I recognize that you're going to be able to orchestrate it using multiple LLMs, and each LLM will only be doing it using their own. But at some point, aren't all these LLMs, large language models, effectively going to converge and become somewhat commoditized?
That's exactly what is not happening. That's what we thought was happening in 2025, early on. But towards the end of 2025, what happened was models started specializing. I'm just quoting Dario here, like in one of his most recent interviews, he said this, where even within coding, which you think might be a specialization, OpenAI's Codex models and Anthropic's Claude models are very different in terms of what they're good at in coding itself. And this is one particular skill. Writing is another skill. Being good at images and videos is another skill. What we are seeing, at least, is that enterprise users are always selecting multiple different models all the time. And that's actually one of the value propositions of the Perplexity product, that you don't have to feel locked into one model provider. You don't have to have one horse in the race. You can hope that Perplexity figures out which model is best for what purpose. And you just have to come to the product and use it, and you can trust Perplexity to care what we need to do for each model.
Let me ask you a separate question. As you know, Amazon has been trying to block your Comet AI browser. They won in court to effectively prevent your service from what they think is scraping their service. How do you think about that, and what is the implication of that case, both on yourself and other AI companies that effectively may try to or have to do similar things to make the service work?
When you go to a store, you want to buy something very, very personal to you, and you want to take your friend along with you for help, make the right judgment call. But the store owner tells you that you're only supposed to use their friend to help you make the decision. Who's actually right here? Our position is you can bring your own friend, and the judge, even in the preliminary injunction ruling, has said that Perplexity is actually useful to the user and is not doing anything egregious. So we believe we will win, and we'll just let the legal process follow.
I think the issue, as far as I understand it, is not so much that the Perplexity friend is somehow doing a disservice to me as the consumer, but in the process of trying to help me, the consumer, that potentially you're able to scrape and collect all sorts of information that in the future could be used in some other way that is unintended, at least by a store owner like an Amazon.
Well, our browser is always like first class in terms of how secure it is. Like, we've published evals on agent reliability, prompt security from prompt injection attacks. We built our own benchmark for that. And these are all like things that you can only keep improving on, right? So it's all solvable. We've made evals for that, and we would love to work with Amazon on these things because together we can solve all the hard problems.
So where does this leave us? Like, let me see a bunch of ones in the chat. If you would let a computer become a digital worker and have access to your email and everything else. I'm not doing that at all. Maybe in a couple of years, if that becomes the new standard, but why would I give a computer access to my email and everything else? Wow, I'm shocked. I am shocked that a bunch of you would. I think you guys are just screwing with me now. I feel like you're just asking for problems if you do that. And I get it. We're still in the early days. This is going to be something else for work. I got to tell you. Who knows what the future of work's going to be? BlackRock launching a staked Ethereum ETF. Interesting. Tom Lee is calling for the markets to make their bottom this month. Him and Kathy Wood were both on CNBC not too long ago. We'll go to that in a few minutes. And the oil chart is not looking good, ladies and gentlemen. Look at this. We're over 100 on Brent. We're climbing back to 100 on WTI. We need this lower. We need it lower. QXO is interesting. I will say that. I'm not ready to pick up more, though. I am not ready to pick up more QXO yet. If oil keeps going higher, it's going to cause QXO to go lower. I don't know if Adobe is screwed or not. I really don't know. Just because CEO is retiring, the quarter was good. The guidance is decent. I sent Matt Money a link. He doesn't love me anymore. I don't know what to tell you. Matt Money's got a link. Yeah, look, Adobe could be the new PayPal. I hate to say that. Could be the next PayPal. Sentinel-1 reported non-GAAP EPS is 7 cents, beat by a penny. Revenue in line with 271.15 million. Oh, look at this. Alex Karp. Palantir still using Anthropic despite Pentagon blacklisting. Quote, our products are integrated with Anthropic, and in the future, it will probably be integrated with other large language models. All right. When I say that Adobe could be the new PayPal, I say that because of the narrative that's being formed around it. PayPal has never had a year where their revenue declined, yet the market looks at it as it's a dying company. So when I say that Adobe could be the new PayPal, it's from the narrative. Adobe's revenue is still growing in double digits, yet the market doesn't seem to care. Bitcoin still holding 70,000. That's big. Gold's coming down. Gold's down 110. I agree. Adobe's going to continue buying back shares at this point. Probably be really good for Adobe. Mercado Libre is down a little bit. Give everybody a price on that. Mercado Libre. So they're down $10, not even 1%, 0.5%. Am I buying more Nebius? No, I am not. At least not here. I'm getting more interested in Reddit. I want to see how low it can go. The Adobe earnings call is at 5 p.m. We're going to listen to it. I want to see what they say about AI. Thoughts on powdered milk? No. Let's check out the Robinhood metrics. Hold on. Where are Hood's new metrics? Are they on the website? All right, so Robinhood February monthly metrics. Here we go. Let me bring it up on screen for everyone. I actually feel obligated to become a freaking shareholder, and I hate feeling obligated to do that. 27.4 million funded customers, growth of 1.74 million year over year. Total platform assets down 3% month over month, 314 billion. Net deposits, okay, we still have positive net deposits. That's incredible. 180 million options contracts trade in February. So this number scares me, everyone. Margin book. Their margin is the second highest over the past year, up 98% year over year. And the market's getting slaughtered right now. That can't be good. How many people are going to get forced to sell, or how many people aren't going to be able to back up their trades with cash? Oh, yes, I'm worried about margin because you know what? Most people don't utilize margin correctly, and most people don't have the capital to backstop their trades and are forced to sell into weakness. This is not good, especially not when you have oil doing what it's doing. I don't like that. I do not like that. I couldn't sustain my milk habit without margin. I mean, you got me there. You got me there, everyone. Han Solo, I mean, I agree with Steve. I used to be highly levered in margin. I got slaughtered each time when the market tanked. I mean, it's just not for me. I think it's a tool that is used incorrectly too much. My own opinion. I could be wrong. It's my own opinion. You can make a lot of money with margin, but you know what? Sometimes the juice just isn't worth the squeeze. And now it looks like we got a few things trying to come back. Apple is up after hours now. Amazon is up after hours right now. Broadcom is up a little bit. I need to do another due diligence on Hood, another valuation model. I don't know. It's definitely looking more interesting now, but I don't know. Correct. Forced sales due to margin is not good. There is no question about that. Look, Hood could go to the 50s. It could. We got to see. Yeah, where is Blue Owl? Blue Owl went down, oh my God, 4.5% today. The yield is 9.98%. I don't know. The private equity play worries me. I actually built a new tool on Claude, but I need to hook up one more thing to it. I'll show you what I built. It's actually pretty cool. No, Claude's not allowed to access my camera. Who the hell does Claude think it is? Claude wanted to access my camera. All right, so check this out. So let's put in NVIDIA. So I'm running a full wheel strategy based on the Tasty Trade playbook. I got to fix one thing in it. Because if it can't scrape exactly the correct option chain, Opus does a synthesis on it. So chain data limited. So it's estimating based off the IV. Watch what comes out. It's really cool. I just got to fix this one thing and figure out how to get live data in there for that. Yes, S&P is non-correction territory. It is the 12th. The only good thing right now is in 3 days, people are going to be buying the S&P and total market funds with their paychecks when they put in for their retirement. So we got that going for us. No, don't say that. S&P considers rule changes to speed up S&P 500 entry. Stop it. I don't know where SpaceX is going to IPO. That's an interesting one. So we get everything in here. So phase one, it gives you everything underlying the action, basically selling a put for a month out at 180. Gives you all the information. I just got to update one thing. But I got to tell you, building with Claude's pretty interesting. It gives you the full strategy of what you should do, et cetera, et cetera. So once I have this done where everything is correct, I'll figure out a way to make it public for the community. So I have been working on that one. That's the latest one I was working on. Yeah, listen, this conflict is wreaking havoc on the market and the commodity markets. There's no question about that. All right, let's see where Adobe is. Adobe's pushing 7%. It's down 1853 right now. I suggest everybody try building with Claude. I mean, you can make some pretty interesting things. All right. Adobe's getting absolutely hammered. Salesforce is down 1.3% after hours now. Service Meow is down 1% after hours right now. Oracle down 0.5%. Palantir down 0.5%. QXO under 20. Zeta holding strong, 1801. All right. Let's go to, we got 14 minutes before Adobe. Let's go to Tom Lee. Let's see what Senor Lee has to say.
Kathy Wood, CEO and CIO of ARK Invest, and Tom Lee, head of research at Fundstrat, chair of BitMine Immersion Technologies, and a CNBC contributor. Welcome to both of you. Tom, you want to just start with your thoughts on the markets? Why is tech kind of not participating this time? They've been a ballast so far in this sell-off.
Yeah, I mean, I think tech in general has actually held up really well, including software. It makes sense to us because, I'm going to make a counterintuitive statement. Higher oil is relatively good for U.S. equities because, one, the U.S. is a net producer of oil, but as people worry about global growth slowing because of high oil, they want to own growth stocks, which actually makes them want to own the U.S.
All right, I disagree. Look, I absolutely disagree with that. Higher oil amounts to several things: higher energy prices, higher input costs for manufacturing, higher transportation costs. Those increase expenses. Increased expenses, if you're growing revenue less, I mean, that compresses margins. I disagree on that 100%. How is higher oil good? That's only good for one branch of the U.S. economy, upstream producers that have unhedged oil. That's it. How is that good for anybody else? I'm calling it how it is and how I see it. I'm not just going to agree with anybody because they say something. There's things I agree with Tom Lee on. That I strongly disagree on that.
Stock market because it is a growth index, especially the Mag 7 and software. So I actually think that this kind of makes sense. And I've heard the earlier conversation today. I'm also in the camp that I think we're making our bottom this month for the equity markets.
Okay, what about, we got Jefferies down 7%, Deutsche down about that much. A lot of people are trying to look around, poke into where these private credit exposures and stuff might be. What would you say about that narrative right now, Tom?
Well, private credit's been a problem for some time. So I think it has been increasingly revealing, as Jamie Dimon said, more cockroaches. I do think it's probably not as systematic as we might fear. I know people carry the Lehman hammer and think that this is a repeat of the GFC. But again, there's a lot of reasons it's not a systematic one. It's just the size of the market's not nearly as large. But also things that look like credit stress aren't really signaling like they did in 2008. So I think it's hurting financials right now, but I don't think it's a broader problem for the market or the economy.
Kathy, you guys are looking, if I'm not mistaken, to kind of help the public get into more early stage growth companies. And we saw last week, Robinhood did something similar. They're IPOing a venture fund. And this comes against this backdrop where a lot of the kind of growthy companies have ended up in private markets and they don't go public anymore. Then I know the SEC has a big push to try to change that. But one of the problems, as you and others know, is that sometimes they don't perform that well. It's very risky. So could you just comment on the current state of affairs? Like, the private markets have losses. You go in the public markets, people don't want losses, but they want access to growthy companies. You know, who can they feel confident will help give them the best of the bunch?
Yes, Kelly. Well, it's very interesting to be managing money at this time and to have managed money, very early portfolio manager, early in my years in the tech and telecom bubble. It's night and day. There was no fear back then. And today there's extreme fear. And there are some reasons, understand that. But I believe, and this is going to fit into what Tom just said, I believe the market, when we look back, maybe at the end of this year, is going to be characterized as climbing a wall of worry. And of course, now with the war.
Climbing a wall of worry, oil's at 100. Like, I'm sorry. Oil's at 100. And it looks like the situation overseas is getting worse. What are we talking about? Climb a wall of worry.
There is another reason. There are another few bricks being put into that wall. This is a really good time to pick up on stocks that might be more volatile. Volatility in our world it does not measure risk as much as it measures uncertainty. And I think the new technology is evolving today, and the way we do, ARC does its research on these technologies to understand how they're going to scale and who's leading the pack. I think we're in a very good position, and the opportunities. This is a technology revolution. And we are not in an AI hype cycle. And we think it has miles to go. And of course, consider the source. It's all we do. But we're beginning to see results, astounding results at companies like Anthropic and OpenAI in terms of their ARRs.
I don't even know what to say to what I just watched with everybody. I don't get it. Like, I legitimately don't get that. Oil being high is not good for the market. It's not good for the U.S. economy. It's not good for earnings. I don't know. I don't know what they're looking at. They're not looking at the same thing as me. I can tell you that. Did Zoom report? Zoom didn't report today, did they? They reported the other day. Yeah, Zoom did not report today. Yeah, I don't know. That was really weird. Really, really, really weird. Now, I don't know that this necessarily matters for some companies. Long term will be fine. Amazon could see compressed margins. Oil is, their operating costs are huge. We got crude at 96.32. Bitcoin, 70,200. The NASDAQ is still going down. Everything is still going down. Where's Adobe at? We got the call in 5 minutes. Where's Adobe at? Negative 6.73%. It is down 18.51. Yeah, where is Venture Global? That's a community favorite. 1277. I mean, what a beauty. Look at this chart. Starting to look really good. What about next? Where's next at? So next is climbing off the lows, still down a lot. Yeah, listen, VG was definitely if you got in at the right time, it was really good. No question about that. All right, I'm going to see if Adobe, I have it on their investor relations site, but I want to see if they are broadcasting on YouTube. They're not. They not have a YouTube channel? Really? How does Adobe not have a YouTube channel? All right, here we go. No, it's only on their website. So, all right. All right, going to the website. Presentation has not started yet. So we will switch over to that in a few minutes. Finance Cobra, which one? Which ones? Yeah, I'm not finding any that's on here. It's just on the website, everyone. They're still saying, please wait. And we'll see if we can get Matt money on. I sent him a link. We'll call Matty live. Matty must be. Oh, Matt, what are you doing? You're live.
At the office trying to be like you.
Oh, you're still at the office. Okay. Well, that would probably be why I did not see a blue check mark when I sent you the StreamYard link. We are about to listen to the Adobe earnings call.
Oh.
If you're interested, you can get on with us.
Unfortunately, I have to finish up here, but otherwise, I would.
All right. We will talk to you later.
You're the man.
Later.
Later.
All right. So Matt cannot come out and play. All right. We're here. We're good. Sharing the screen. I don't hear anything from them, though. I don't think they started the call yet. I don't know if I can play music, so we're going to wait till this actually starts. As I watch this, all I'm thinking is, how is this not getting replaced by AI? And I think that's why Adobe's down.
Good day, and welcome to the Q1 FY 2026 Adobe Earnings Conference Call. Today's conference is being recorded. At this time, I would like to turn the conference over to Doug Clark, Vice President of Investor Relations. Please go ahead.
Good afternoon, and thank you for joining us. With me on the call today are Shantanu Narayan, Adobe's Chair and CEO, David Wadhwani, President of Creativity and Productivity, Anil Chakravarthy, President of Customer Experience Orchestration, and Dan Dern, Executive Vice President and CFO. On this call, which is being recorded, we will discuss Adobe's first quarter fiscal year 2026 financial results. You can find our press release as well as PDFs of our prepared remarks and financial results on Adobe's Investor Relations website. The information discussed on this call, including our financial targets and product plans, is as of today, March 12, and contains forward-looking statements that involve risk, uncertainty, and assumptions. Actual results may differ materially from those set forth in these statements. For more information on those risks, please review today's earnings release and Adobe's SEC filings. On this call, we will discuss GAAP and non-GAAP financial measures. Our reported results include GAAP growth rates and non-GAAP growth rates, including constant currency rates. During this presentation, Adobe's executives will refer to revenue growth in constant currency rates unless otherwise stated. Non-GAAP reconciliations are available in our earnings release and on Adobe's Investor Relations website. I will now turn the call over to Shantanu.
Thanks, Doug. Good afternoon, everyone, and thank you for joining us. Earlier today, we announced that I will be transitioning from my role as CEO after over 18 years and 100 earnings calls. Over the coming months, I will be working with Frank Calderoni, Adobe's lead director, and the board of directors to identify my successor and to ensure a smooth transition. Until then, I will continue to lead Adobe as CEO and will stay on as chair of the board to support my successor, just as John and Chuck did when I took on this role. What attracted me to Adobe 28 years ago remains unchanged. Our leadership in creating new market categories, world-class products, a relentless drive to innovate in every functional area of the company, and our employees who continue to invent the future. The privilege of leading this company has been the greatest honor of my career, and I'm committed to setting it up for its next decade of growth with the right leader and executive team in partnership with the board while driving our fiscal 26 strategic priorities. Our mission to empower everyone to create represents an even larger opportunity in the AI era. Let me outline what Adobe is doing to drive our top-line growth while maintaining a high level of profitability. As a company that has prided itself on creating categories, our AI transformation begins with a focus on customer-centric product strategy to anticipate and fulfill the diverse needs of a large and growing customer base. At Adobe, we're targeting business professionals and consumers and creative and marketing professionals through differentiated AI-infused and AI-first product offerings across various routes to market and different monetization models. With creativity at the core, we're expanding innovation in all our flagship applications, as well as investing in new offerings. These new products include Adobe Acrobat Studio with Adobe Express, Adobe Firefly, and Adobe Gen Studio. Our new AI-first offerings, ending ARR more than tripled year over year, reflecting progress against this opportunity with individuals and enterprises alike. Adobe's continued success in AI will be underpinned by our deep understanding of creativity domains, the vast amount of data to which we have access, delivery of complex workflows driving business outcomes, and a great brand across individuals, small and medium businesses, and enterprises. Content is at the heart of all Adobe solutions, which powers educational, social, marketing, brand, entertainment, and business content. Our growth has always been fueled by attracting new users, individual consumers, students, and business professionals into our products, delighting them and driving adoption. We're ruthlessly focused on monthly active users as an indicator of adoption and success for Acrobat and Express, Creative Cloud applications, and Adobe Firefly across different surfaces, including desktop, web, mobile, and LLM platforms. In Q1, we surpassed 850 million monthly active users of Acrobat, Creative Cloud, Express, and Firefly, achieving 17% year-over-year growth, a clear indication that we have both strong usage and a foundation for monetization. In addition to broad end-user adoption, Adobe has always been a trusted partner for enterprises, and we're increasingly being asked to help them drive their AI strategy across customer experience orchestration globally. Enterprises are looking to the combination of employees and automation to deliver on the demands of content and marketing at scale. Agentic AI will further enable outcome-focused enterprise workflows as customers look beyond speed to elevate creative differentiation, brand governance, and personalized experiences across channels. Adobe's end-to-end solutions are uniquely designed to meet these needs at scale. Strong momentum across our enterprise offerings underscores our leadership and customer confidence in Adobe's ability to deliver AI-driven value. In Q1, globally, we achieved over 30% year-over-year growth in AEP and apps, as well as Adobe GenStudio ending ARR. Our goal has always been to meet customers wherever they work across the broad range of surfaces they use every day, and emerging new platforms have always been additive to our market opportunity. In addition to Windows, Mac, iOS, Android, Chrome, and Edge, we intend to integrate with leading AI platforms such as Anthropic, Google, Microsoft, NVIDIA, and OpenAI, providing customers with access, choice, and flexibility. We're jointly driving enterprise transformation at scale in collaboration with global leaders such as Accenture, Cognizant, Deloitte, Dentsu, EY, IBM, Infosys, Omnicom, Publicis, PwC, Stagwell, TCS, and WPP. Given the strategy, I'm pleased with how Adobe is transitioning to an AI-driven business. We had a strong start to the year, achieving $6.4 billion in revenue in Q1, representing 11% year-over-year growth. GAAP earnings per share for the quarter was $4.60, and non-GAAP earnings per share was $6.06, representing 11% and 19% year-over-year growth, respectively. Driving this momentum were Acrobat and Express, Creative Cloud Pro, overall strength in the CXO enterprise solutions, as well as in our AI-first applications. Importantly, we saw tremendous MAU growth in our new initiatives that dampens ARR in the short term, but sets us up to deliver in the quarters ahead. As we continue to transform the business to capitalize on the AI opportunity, our customer-focused strategy, rich product roadmap, innovation momentum, and early success across all routes to market position us well to empower everyone to create. I'll now turn it over to David.
Thanks, Shantanu. Hello, everyone. AI is fundamentally reshaping how people create and work. As experiences become increasingly conversational and outcome-driven, more people than ever will benefit from our creativity and productivity tools. Our approach is to expand access to AI across our existing audiences in products like Creative Cloud and Acrobat, reach new audiences with products like Firefly and Express, and help automate content production in enterprises with Firefly Enterprise. As we execute on our strategic initiatives, we're pleased with the progress we're making against 3 growth drivers. First, new user acquisition is gaining momentum, and we are reaching more new users than ever before as measured through the growth of monthly active users. Notably, Creative Premium MAU crossed 80 million, growing 50% year over year, and includes web and mobile versions of Firefly, Express, Premiere, Photoshop, and Lightroom. Second, AI usage continues to grow quickly as measured through record levels of generative credit consumption. Third, our content automation solutions continue to see strong enterprise adoption as measured through record numbers of API calls. These metrics highlight that we're executing against our strategy to empower individuals and businesses to create content in new ways in the era of AI. In the first quarter, subscription revenue for business professionals and consumers was $1.78 billion, growing 15% year over year. Our vision for business professionals and consumers is to deliver AI-powered applications that reinvent how users comprehend, create, and share content. PDF Spaces transforms collections of files and links into dynamic knowledge hubs that allow you to easily collaborate with others. Acrobat AI Assistant provides users conversational experiences that help them comprehend information faster and more accurately with an individual PDF or across documents in a PDF space. Our Acrobat and Express integrations empower users to turn content they're consuming into generated presentations, infographics, audio summaries, and more. It's clear that these AI-based capabilities are resonating with users, as AI Assistant MAU doubled year over year and Express MAU tripled year over year. Express is now used in 99% of US Fortune 500 companies. In Q3, we introduced Adobe Acrobat Studio, a single offering that brings together all these AI creative capabilities with the PDF tools users know and rely on. Subscription upgrades to offerings that include Acrobat Studio value are off to a strong start across routes to market, including Adobe.com and enterprise license renewals. We're embedding Adobe's capabilities directly into new conversational platforms. In Q1, we launched Acrobat and Express for ChatGPT, significantly expanding the reach of our creativity and productivity workflows. You can expect to see similar integrations into Copilot, Claude, and Gemini as those platforms support integrated application experiences. We activated new Express partnerships, including Airtel in India, illustrating how our distribution strategy continues to accelerate new user acquisition at scale. Partnerships like these are helping to drive momentum across our business professional and consumer offerings across individuals and businesses. Subscription revenue in Q1 for creative and marketing professionals was $4.39 billion, growing 11% year over year. Our strategy for creators and creative professionals is to empower everyone to create, from first-time creators to seasoned professionals to large enterprises seeking to scale content production. Firefly, an all-in-one creative AI studio, is the right tool for the next generation of creators and creative professionals. Creative Cloud, with deeply infused AI capabilities, continues to be the destination of choice for power and precision creation. And enterprises are increasingly turning to Firefly Enterprise to unlock a new era of content automation. Firefly is quickly becoming the go-to destination for content generation, ideation, and assembly. Users can generate with over 30 industry-leading models, including Adobe, Google, and OpenAI. They can collaboratively ideate with stakeholders in Adobe Firefly boards. They can edit and assemble image, video, and audio using Firefly's prompt-based editing capabilities with integrated Photoshop and Express web journeys. Firefly momentum is strong, with generative credit consumption growing over 45% quarter over quarter. While that growth is broad-based, generations are skewing toward higher value modalities, with video generative actions growing more than 8x year over year and audio generative actions doubling year over year, reflecting customers moving deeper into AI-assisted creation across the full creative process. As a result, Firefly subscription and credit pack ending ARR grew 75% quarter over quarter. Creative Cloud applications continue to embed new AI capabilities, making users far more productive. Photoshop added new partner models and support for higher resolution image generation and editing. Illustrator expanded its generative design capabilities with models from OpenAI, Ideogram, and Google to support frequent vector workflows. Premiere added AI object masks, which quickly became one of the most used AI features in the application. As Creative Cloud users increase AI usage, we're seeing purchases of Firefly credit packs ramp nicely. Firefly Enterprise, the combination of Firefly Services and Firefly Foundry, is empowering the world's largest brands to scale content production to unprecedented levels. Firefly Services provide enterprise-grade APIs, giving businesses more than 30 content production capabilities, which can be run in automated workflows. These include 3D digital twin workflows, showcasing physical products, image and video resizing across every social and digital channel, and campaign variant generation and assembly for personalized marketing content. Firefly Foundry enables the world's largest marketing teams and media companies to build private, deeply tuned AI models trained on their own IP. Unlike generic AI models, Firefly Foundry gives enterprises a commercially safe model that understands and is able to accurately generate their branded assets. Together, these products are driving measurable business outcome by increasing production scale, accelerating velocity, and reducing cost. Firefly Enterprise new customer acquisition grew 50% year over year. Additional Q1 creators and creative professionals highlights include Photoshop launched a conversational editing experience in ChatGPT. 85% of films premiering at the 2026 Sundance Film Festival were made using Adobe Creative Cloud tools. Frame is emerging as the cross-media work-in-progress repository to manage the rapidly increasing volume of content being created and doubled the number of assets under management year over year. And Firefly Foundry continues to build momentum in the media and entertainment vertical, with partnerships including B5 Studios, Cantina Creative, Creative Artist Agency, United Talent Agency, and WME. While Q1 had many highlights, our traditional stock business saw a steeper decline than we expected. This shift is playing out more quickly than we had planned for, and our focus remains on giving customers meaningful choice between stock and generative AI as they build their creative and marketing workflows. Q1 reinforced our confidence in the strategy and opportunity across creativity and productivity. We're thrilled with the new user acquisition and usage growth for creative freemium offerings. We're excited to see the momentum continue with workflow and automation capabilities driving incredible efficiencies in enterprises. I'll now turn it over to Anil.
Thanks, David. Hello, everyone. Adobe provides the leading AI-powered solutions for creative and marketing professionals to deliver personalized customer experiences at scale. AI remains a tailwind for our enterprise business, enabling us to deliver creative and marketing professional subscription revenue of $4.39 billion in Q1, growing 11% year over year. Adobe pioneered the category of customer experience management. Enterprises around the world rely on our software to identify prospects, acquire new customers, engage and delight them with personalized experiences, and grow customer lifetime value. We are the leading provider of content management systems for websites and mobile apps, and the leading customer data platform that serves as the foundation in enterprises for digital customer engagement. We serve 99 of the Fortune 100 and are the digital platform of choice for chief marketing officers and chief digital officers for their ongoing campaigns and for major marketing moments like the Olympics and Super Bowl. During the 2026 Super Bowl, Adobe-enabled experiences peaked with more than 8 billion analytics server hits, 21 million concurrent viewers, 34 million page views, 1.5 million video requests per minute, and 216 million emails delivered. In the era of AI, every enterprise needs to drive their current business while harnessing AI to address new trends in consumer behavior and expectations. Companies must ensure their brands remain front and center, even as consumers are increasingly discovering new information, engaging with businesses, and buying products through LLMs and agents. These trends vary significantly by geography and consumer segment, adding complexity for global companies that need to provide personalized experiences through well-established channels like websites, email, and mobile apps, while ramping up new channels like LLMs. Adobe has become the trusted partner for AI-powered customer experience orchestration through our thought leadership, rapid innovation, and omni-channel capabilities, while providing the security, reliability, data governance, global scale, and partner ecosystem that enterprises require. Adobe's unified CXO platform provides solutions for brand visibility, content supply chain, and customer engagement. Adobe Experience Platform is a leading platform for digital customer engagement and brings together new AI-powered apps and agents to transform how businesses build, deliver, and optimize marketing campaigns and customer experiences, as well as reduce costs. In Q1, we introduced new AEP agents along with expanded agent orchestrator capabilities, now available to all AEP customers via a try and buy program. The scale of our platform has grown to over 35 trillion segment evaluations and more than 70 billion profile activations per day. Subscription revenue for AEP and native apps grew over 30% year over year, demonstrating continued momentum and value realization. As consumers increasingly use LLMs and agents to discover brands and purchase products, brand visibility has become critical to success in the agentic web. According to Adobe Digital Insights, during the 2025 holiday season, traffic to retail sites from LLMs increased nearly 7x, bringing qualified referrals that convert 31% higher and generate 254% more revenue per visit. Adobe's brand visibility solution, which includes Adobe Experience Manager, Adobe LLM Optimizer, and Adobe Brand Concierge, empowers brands to engage consumers across their own properties, search, social media, LLMs, and agentic channels. Adobe LLM Optimizer enables enterprises to enhance the discoverability of their websites by LLMs and significantly increase their organic traffic. Adobe Brand Concierge is an AI-first application enabling businesses to configure and manage agentic AI experiences on their websites and mobile apps to guide consumers from exploration to purchase decisions using immersive and conversational experiences. We expect our pending acquisition of SEMrush will expand our offering to provide marketers with a comprehensive solution to shape how their brands appear across their own websites, LLMs, traditional search, and the wider web. Content is at the heart of delivering personalized customer experiences, and the demand for high-quality, on-brand content has exploded. GenStudio is our comprehensive content supply chain offering spanning content ideation, creation, production, and activation. GenStudio is highly differentiated by integrating best-in-class capabilities across Adobe's creativity and marketing applications, including Creative Cloud, Firefly Enterprise, Frame, Adobe Experience Manager, and Workfront. In Q1, we delivered breakthrough innovations enabling GenStudio-created assets to flow directly into activation workflows across the Adobe stack and a broad ecosystem of advertising platforms, including Amazon Ads, Google, LinkedIn, and Meta. Ending ARR for the Adobe GenStudio family of products grew over 30% year over year as the world's leading brands and agencies increasingly turn to Adobe to power their content supply chain. Q1 accomplishments and business highlights include strong customer demand for our agentic web offerings, with over 650 customer trials underway for Adobe LLM Optimizer, Sites Optimizer, and Brand Concierge. Continued adoption and momentum for AEP AI Assistant, with 70% of all AEP customers using the agentic capabilities. Partnership in the OpenAI initiative to enable brands to create ads for ChatGPT. Accelerating momentum for Firefly services and custom models as part of the GenStudio solution with over 2,500 custom models since launch. And Q1 industry analyst recognition, including being named a leader in 2 Forrester Waves for digital asset management solutions and revenue marketing platforms for B2B, as well as the Gartner Magic Quadrant for personalization engines. Adobe's unique value is helping enterprises solve their comprehensive customer experience and content supply chain needs, balancing creativity, automation, and costs. Global customer wins in the enterprise in Q1 included Centene, Danske Bank, Deutsche Bank, Heineken, HP, MongoDB, Nordstrom, Paramount, Pilot Travel Centers, RACQ, Revlon, Sherwin-Williams, Southwest Airlines, Stagwell, Target, TUI Travel Group, and WPP. Customer experience orchestration is a critical imperative for every business to drive both top-line and bottom-line growth. Our unique vision, comprehensive offerings, rapid pace of innovation, extensive partner ecosystem, and laser focus on delivering business value position Adobe as the partner of choice for AI-powered customer experience orchestration. we look forward to unveiling significant innovations and partnerships that will further advance our leadership position at Adobe Summit in April. I'll now pass it to Dan.
Thanks, Anil. Today, I'll start by summarizing Adobe's performance in Q1 fiscal 2026, highlighting growth drivers across our customer groups, and I'll finish with our financial targets. In Q1, Adobe achieved revenue of $6.40 billion, growing 12% year over year as reported and 11% in constant currency. GAAP EPS was $4.60, and non-GAAP EPS was $6.06, increasing 11% and 19% year over year, respectively. GAAP operating margin was 37.8%, and non-GAAP operating margin was 47.4%. Q1 financial highlights included total Adobe ending ARR of $26.06 billion, growing 10.9% year over year. Total customer group subscription revenue of $6.17 billion, growing 13% year over year, or 12% in constant currency. RPO of $22.22 billion exiting the quarter, growing 13% year over year, or 12% in constant currency. And CRPO growing 12% as reported, or 11% in constant currency. Cash flows from operations in the quarter were a Q1 record of $2.96 billion, and ending cash and short-term investment positions exiting Q1 was $6.89 billion, and repurchasing approximately 8.1 million shares of our stock during the quarter. Exiting Q1, we have $3.89 billion remaining of our $25 billion authorization granted in March 2024. Business professionals and consumers subscription revenue was $1.78 billion, increasing 16% year over year as reported, or 15% in constant currency. Q1 growth drivers for business professionals and consumers included sustained double-digit ending ARR growth across all geographies. Acrobat and Express MAU grew approximately 20% year over year. Acrobat AI Assistant ARR grew approximately 3x year over year. And strong upgrades to Acrobat Studio as part of enterprise license renewals. Creative and marketing professionals subscription revenue was $4.39 billion, increasing 12% year over year, or 11% in constant currency. Q1 growth drivers for creative and marketing professionals included growth in Creative Cloud driven by the CC Pro offering. Creative freemium MAU crossed 80 million, growing over 50% year over year, and includes web and mobile versions of Firefly, Express, Premiere, Photoshop, and Lightroom. Generative credit consumption increased more than 45% quarter over quarter. Firefly ending ARR across Firefly app, Firefly credit packs, and Firefly Enterprise exceeded 250 million. Gen Studio and AEP and apps ending ARR each grew over 30% year over year. Strong pipeline momentum for new AI offerings across LLM Optimizer, Sites Optimizer, and Brand Concierge. Continued strength and retention across the enterprise customer base, and continued success in the enterprise as total customers with ARR over 10 million grew greater than 20% year over year. As we transform our business, we continue to deliver double-digit total Adobe ARR growth at scale, driven by innovative technology, the breadth of our solutions, and strong go-to-market motions. From a product perspective, Q1 ARR growth was driven by Acrobat and Express, Creative Cloud Pro, and AEP and apps in Gen Studio in the enterprise, as well as growing momentum in our expanding portfolio of AI-first applications, including Firefly app and Firefly Enterprise. In total, ARR from AI-first applications more than tripled year over year. In Q1, we drove significant MAU growth for our new creative web and mobile freemium offerings, including Express, Firefly, Photoshop, and Premiere. While this freemium approach is intentionally designed to serve the next generation of creators, build the Adobe brand, and set the foundation for accelerated growth over time, these offerings have a near-term impact on ARR. In addition, we continue to monitor and drive utilization of AI functionality across our products. In Q1, this AI functionality drove significantly greater credit consumption quarter over quarter. However, in Q1, we experienced a greater than anticipated decline in our traditional standalone stock book of business. While this is happening faster than expected, our strategy is to provide customers with the choice to use stock or generative AI offerings for creative and marketing workflows. We expect strength for our core Acrobat and CC products and enterprise demand for our CXO solutions, coupled with new MAU growth for Firefly and Express, and increasing AI usage and monetization to gain momentum as we move through the year. We continue to expect total Adobe ARR growth of 10.2% for FY26. Let me now turn to our financial targets, which assume current macroeconomic conditions and do not include the contribution of SEMrush, which we continue to expect to close in Q2, subject to regulatory approvals and closing conditions. For Q2 fiscal 2026, we're targeting total Adobe revenue of $6.43 to $6.48 billion. Business professionals and consumers subscription revenue of $1.80 to $1.82 billion. Creative and marketing professionals subscription revenue of $4.41 to $4.44 billion. GAAP EPS of $4.35 to $4.40. And non-GAAP EPS of $5.80 to $5.85. For Q2, we expect non-GAAP operating margin of approximately 44.5% and non-GAAP tax rate of approximately 18%. In addition, we are reaffirming our FY26 targets. Adobe remains focused on executing our growth strategy in a period of profound technological change. As customer behavior evolves, the strength of our platforms and the rapid pace of our AI-driven innovation in creativity, productivity, and customer experience orchestration workflows position us to drive profitable growth and seize the opportunities ahead. Shantanu, back to you.
Thanks, Dan. Q1 represented a strong start to the year, both for our existing platforms where we've been innovated with AI, as well as the new strategic initiatives that will drive future growth. Adobe remains steadfast in its commitment to innovation and delivering value to our customers, partners, and shareholders. We're confident that our customer-centric approach, groundbreaking product innovations, passionate employees, and unwavering execution will continue to drive growth and create durable value. Thank you, and we will now take your questions. Operator?
Thank you. If you are dialed in via the telephone and would like to ask a question, please signal by pressing star 1 on your telephone keypad. Please limit yourself to one question in order to give everyone an opportunity. If you are using your speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Again, please press star 1 to ask a question. And we will take our first question from Jay Vleeschhouwer with Griffin Securities.
Thank you. Good evening. Shantanu, first for you, I just want to say how much I have appreciated our 3-decade relationship, and I do want to commend you, if that's a strong enough word, for the multiple transformations at the company that we've seen over that long period of time. So just wanted to make that personal and professional remark before I ask my question, which this evening is actually for Dan, not a product question. One of your most important metrics, I think, is and will be the progression of your current RPO. The constant currency growth rate for CRPO was about a point better than in Q4. And also over the last number of years, we've seen that CRPO has fairly consistently been somewhere around 51, 52% of your estimated next 12-month revenue on a rolling quarterly basis. Is there any reason to believe that your revenue visibility via CRPO coverage might proportionally increase over the next number of years? Maybe just talk about that, perhaps structural change that you foresee, if any, in your CRPO.
Yeah, thanks, Jay. Appreciate the question. We're pleased with the momentum that we exited the year last year, 2025. Strong progression across all three customer audiences, and the business performed well. As we window into this year, you can see the strength in terms of our enterprise business and the way we're combining solutions from creativity to marketing to create those content automation solutions and help brands drive their business in this environment. So we're pleased with the progression and the performance and the strategy and the execution against that strategy. I don't see any reason why the trends we've seen in the business historically would in fact to drive a different dynamic as it relates to RPO, CRPO, and translation to revenue.
And Jay, I just wanted to say thank you for those kind thoughts. And I'd be remiss if I didn't say that I'm even more excited about what we've been accomplishing as it relates to the AI transformation and the opportunity ahead of us. So, we're going to stay really focused on capitalizing on that opportunity.
Thank you.
Thank you. And we will take our next question from Saket Kalia with Barclays.
Okay, great. Hey guys, thanks for taking my question here. Shantanu, I just want to start by echoing Jay's comments. I mean, clearly this has been a very dynamic space, but you've helped build one of the largest SaaS businesses in the world over the years. So let me just start by saying congrats. But maybe on that point, I was wondering, just a bit of a broad question, what is the board looking for in Adobe's next CEO?
Well, thanks again, Saket. I think at our core, we're always going to be a product company. And I think, taking advantage and looking around the corner as it relates to the immense opportunity that AI has across creativity and marketing is the real opportunity for not just the CEO, but the company as well. And, I think from my perspective, it's a massively scaled business right now. And so, just continuing to have a growth agenda, and we're all about our people, and so the values associated with it. And I'm actually really confident that the board and the special committee, will do a great job of shepherding that search.
Very helpful. Thank you.
Thank you. We will take our next question from Brad Zelnick with Deutsche Bank.
Great. Thank you so much. Firstly, Shantanu, congrats on an epic run. Your impact on Adobe and the industry at large, I know, will be enduring for decades to come. But my question is for David. David, it's great to hear the generative credit consumption is ramping so meaningfully, up 45% sequentially, and much of the expansion has been skewing towards video and audio. Would love to understand what use cases you're seeing consume credits so meaningfully in video and audio. Are we still in more of an exploration stage? Or maybe asked differently, what are the use cases you're seeing from leading edge customers that are driving this type of consumption? Thanks.
Yeah, I think that's a really important question and indicator in terms of where we're going. If you take a step back, I think when you look at the evolution of AI, it has definitely gone from a fun thing to play with to something that is that's evolving and being integrated more and more into existing workflows. And now I think people are very much relying specifically on the need for AI to be part of their creative process. And so you can, for those who haven't been tracking, you can think about generative credits like tokens for our creative applications. Obviously we do a lot of generations across the entire business, but that's effectively what that is. The net of what you're seeing here is we have more people generating than ever before. You saw that monthly active users of our premium creative software, as an example, is up to over 80 million, 50% year over year. So we have more people generating. They're generating higher resolution because it's not just a fun thing to play with. It's actually part of their existing workflows. And they're generating higher modalities, things like video, audio, design. And so you see all of that pushing generative credits up. The second thing is they're actually generating in more places, right? We've certainly started the process by having them create and use generative AI in our core flagship applications, and that continues to grow nicely. Firefly is becoming really more of a destination. We talked about how that business grew 75% sequentially quarter over quarter. Express boards for broad-based ideation and stakeholder value. So lots of reasons to look at this as the right leading indicator. And the last thing I'll say is we're starting to see a nice ramp in terms of existing creative professionals, adding on additional creative packs as a result of this.
It's really helpful. Thank you so much.
Thank you. We will take our next question from Mark Murphy with JP Morgan.
Thank you, Shantanu. Congrats on one of the greatest and longest CEO tenures and growing Adobe to $26 billion in revenue. I want to ask you and also the others. It's remarkable to see 13% subscription revenue growth. We haven't seen that in quite some time. It's intriguing that total revenue growth accelerated in constant currency to 11%, or maybe I should say upticked. But can you speak to the revenue acceleration? We were not expecting to see revenue accelerate quite yet. And I'm just trying to understand, should we assume the stock business is pretty small? And, therefore, whatever minor setback you saw, it's just being more than offset by tripling in AI revenue and the step up in credit consumption that Brad asked about. And that maybe, is it that kind of netting out that drove this top line acceleration during the quarter?
Yeah, a couple of things, Mark. I mean, if you take a step back and really look at, as we've been going through this transition, what we've been focused on, first and foremost, it's about, are we driving the right product innovation with great new customer audiences in sight? And, the way I tend to think about that, it's on the user side, as we have been saying, really driving a huge amount of new user adoption and usage is the early indicator for us that we're driving success with the next generation of creators and business professional and consumers, because our strength with the creative professional continues. And so I think we've done a really good job with Firefly and Acrobat and Express continuing to drive innovation in those particular areas. And then on the other side of the spectrum, I mean, we've always said one of our sustainable differentiations is what we do within the enterprise. And so, the enterprise pipeline and continuing to make sure that we deliver. You saw both Gen Studio as well as AEP and apps growing 30%. I think as it relates to, the revenue, we're doing a better job of really making sure that, as it relates to translating ARR to revenue, that we're really focused on it. That continues to be both a focus on making sure that we drive retention and, just looking at linearity. So the linearity also associated with the business tends to help with that. So, we're pleased with, revenue as well as EPS. But I think bigger picture, we just look at it and say the fact that we're driving AI across the individual user segment and the enterprise, which, was a really strong quarter. I think as it relates to your question around stock or order of magnitude, it's about a $450 million book of business. And maybe, just to talk a little bit about that, if you take out the stock business like for like, instead of the 10.9% growth, it would have been approximately 11.2% growth. So, just to give you a flavor. Now, we still look at that entire business as an opportunity because people do like to start any creation or marketing workflow with a piece of content. That's increasingly become generative. That's why you saw the, scale, I think, in how we are doing generations. But hopefully that gives you a flavor of how we think of that business. And we want to make sure that we offer a combined royalty-free stock plus generative AI offering to take advantage of that opportunity.
Wonderful. Thank you so much.
Thank you. We will take our next question from Keith Weiss with Morgan Stanley.
Excellent. Thank you guys for taking the question. And Shantanu, I don't think we can start a question without congratulating you on what was really an amazing career. And I think it's pretty safe to say that you've been a North Star of leadership for the entire careers of probably most of the people on this call. And your stewardship of Adobe has just been legendary. So you'll be sorely missed. So it's been a pleasure working with you. So thank you for all of that. And best of luck on your future endeavors. Maybe as a little bit of an advertisement for your future successor, you talked a lot about laying foundation for future growth. You talked about some of the initiatives in the near term that temper near-term ARR, but sets up for success in the longer term. Can you talk to us a little bit more about those initiatives and a little bit more about those foundations and how you expect that to evolve, and maybe the time frame for what today is a foundation building initiative to when that becomes more of a ARR driving initiative, when that becomes more of the acceleration story within Adobe. Thank you.
Yeah, sure, Keith. And again, thank you all for the kind remarks. I'm not done yet. I just want to make no mistake, I'm going to be laser focused on continuing to drive the company until we have a new CEO and to make sure they are successful. But the things that we try to outline as strategic priorities. I mean, first, creativity is at the core on the DNA. And as it relates to the business professional and consumers, we just believe that the combination of creativity and marketing, creativity and productivity with the Acrobat plus Express is what's going to drive both usage as well as an ARR. And so I think in terms of how we look at that particular business, that's driving good mid-teens growth, and we want to as we continue to drive applicability of Express in that, accelerate that business. And so, the good news is the early indicators, which is MAU, is really increasing. Same thing with the freemium. I think in our prepared remarks, we talked about, the 80 million that we're seeing as it relates to the creative freemium MAU. And so I think even that's driving the business. The slight difference, Keith, in those businesses tend to be that in the traditional business, when somebody came and bought it, you would just immediately translate that into ARR. And here they have to see a little bit of the paywall, and they have to get, so it's a little phase shifted is how I think about it. But, for that particular customer segment, the fact that we're driving MAU, that is the right early indicator for us to focus on, much like we did with Reader for so many years, which is, you get the adoption and you get the usage. And Reader ubiquity, even in new environments like Chrome, as well as Edge, are really what's driving the revenue. So that's sort of the early indicator and driving that. The core creative professional, I think the ARR will continue to be driven by adding more value to the products. Creative Pro, which is the offering there, it's good to see the success associated with that. And I think on the enterprise side, hopefully, both from our prepared remarks and from the answers to your question, that's really, an area of strength for us, because people are looking at it, and with AI, everybody wants to know how you transform your business. Every CEO that I talk to wants to ensure that they deal with the next generation of consumers and attract them, as well as what they want to do then is say, how do I ensure that for my marketing spend, I'm getting as much breadth as I can, as well as how much automation and productivity in terms of revenue. And so, I think the fact that we have all these new offerings, specifically Firefly, Dan, I think, talked about a $250 million book of business for Firefly. That didn't exist, a few years ago. As we talk about what's happening with Gen Studio, 30% growth, AEP and apps. And, I would venture to say, Keith, that we should hopefully see what we had identified as the AI first, book of business. That tripled, but, that should be our next $1 billion business. So, that's, we're ruthlessly focused on all of those. So hopefully that gives you some color on, why we're excited about the performance that we put up.
Outstanding. That was great. Thank you so much.
Thank you. We will take our next question from Alex Zukin with Wolfe Research.
Yes. Hey, guys. Thanks for taking my question. And again, echoing everybody's praise, Shantanu, on the call, it's truly been a special opportunity to work with you and, follow your progress. I guess maybe I have a quick two-parter, which is, if I think about the impact of AI MAU growth on ARR growth in the quarter, can you maybe just unpack exactly why it was dampened? And as consumption trends improve, how do we think about that kind of impact as we head through Q2, Q3, Q4? When does net new ARR growth start to maybe go positive? And then maybe just anything on the timeline that we and investors should expect around the CEO search. Is this something that, is a quarter, multiple quarters? Any timing there would be helpful.
maybe I'll cover the second part and start, which is, if I take a step back, actually, because this is a question that if is on people's minds, I just wanted to actually say that there never would have been a good time given how much Adobe is part of me. So I do want to start off with that. And in many ways, I've always believed that my role is looking around the corner, which is whether it's positioning the company for the future or about product and leadership. And as we've said many times on product, I feel really good about how we've transformed our roadmap. Based on this AI and customer audiences, the new products are both exciting and groundbreaking. On leadership, we've always invested in developing a really deep bench of outstanding execs. But timing-wise, part of it is it was really important for me to be transparent about my decision and communicate and allow the board, to take ownership for the selection. So I would suspect it'll take, a few months. This is not because I've just notified them. So hopefully gives you that a little flavor for that. And I'll start on the other question, Alex, a little bit, and then ask David and Dan, which is the way you have to think about it is our traffic patterns in terms of creativity at adobe.com is only going up and to the right. We have two options in terms of how we guide that traffic. We can guide that to ARR that comes immediately, or we can guide it to a long-term value and what drives greater long-term value in terms of getting the right product. And increasingly, we're ensuring that we transition. So top-line traffic is good, and that's why when we say dampen, I like phase shift also a little bit because that sort of moves out. If you think about, the fact that we reaffirmed our targets, I mean, that would imply that, we would expect double-digit ending book of business growth for the remaining 3 quarters. So hopefully that gives you some flavor. But David?
Yeah, I'm happy to just add on a little bit there. So, as Shantanu indicated, we look at creativity as a whole as bigger than it's ever been. And if we look forward, we couldn't be more excited about the fact that literally everyone in the world is going to be creating. They're going to be creating visually. They're going to be creating images, videos, designs, and that's really our wheelhouse, right? And if we think about the shape of that broader creative audience, that is evolving, right? So we have creators now representing basically anyone in the world that wants to create visually. We have creative professionals who are under more and more pressure to create more prolifically and more content. And we have enterprises that are looking to automate more of that creativity. And so as we think about that creativity infusing itself into everything, we think about it in two columns. The first is around the end user, right? And if you think about that, it really is about reaching the end user where they are. And so we have freemium offers like Firefly and Express. We have power and precision by embedding AI in our existing creative products. And we have more and more products for businesses around automation with Firefly Foundry and Firefly Services now part of Gen Studio. So as we think about the growth algorithm for growth, we're going to see more traffic to adobe.com. We continue to see record traffic levels. Traffic continues to grow very nicely. And how we route that traffic to freemium offers is going to be really the evolution that Shantanu is talking about in terms of the change that we should expect to see. And as that traffic goes to these new offers, it's just going to take a little time for them to use the product, to hit the paywalls, and then translate out. So again, as we said on the prepared remarks, this is really on strategy to drive MAU, drive credit consumption, drive enterprise usage, and we should expect to see that start to accelerate in the back half.
Thank you.
Perfect. Thank you, guys.
We will take our next question from Matt Swanson with RBC Capital Markets.
Yeah, great. Thank you. Shantanu, I'd echo my congratulations, I guess, as a work for this too. But I want to talk to you about the partnerships that we've had announced the last 2 quarters. So last quarter with all the embedded models, and then this quarter building on even more so with a lot of the advertising platforms, Amazon Ads, Google, Meta. It's a lot of different companies that I think over the last year on this Gen AI journey, investors have brought up to us as potential competitors or maybe almost risks to Adobe that are now kind of part of the ecosystem. So can you talk a little bit more about kind of how you're evolving in this role of orchestration to really help, monetize all this new creative content for all these stakeholders?
Great. And so maybe, I'll touch on the enterprise one first, and then I'll touch on the models. I mean, I think as it relates to the enterprise, I mean, what's completely clear is as we are helping people with customer experience orchestration, and Anil can certainly add to that. I mean, people are looking to us from everything. They're looking to us for, brand visibility, acquiring customers, serving them, and then, ensuring that they create a long-term engagement. So if you think of it that way, there's just no question that from the perspective of a CMO or a CIO or the head of business, they're looking to Adobe because in this LLM world, it's going to become even more important to them that they actually have a direct engagement with their customers and their own sites actually take way more importance in terms of the value. And so, as a multi-channel world emerges in the LLM space, our ability to support it. So those specifically are like the partnerships with Google and Amazon, Meta, as well as the other ad places. I think to your point, all of them may have an offering because they have to allow a self-serve offering. Those typically tend to be geared towards the small and medium business and maybe even smaller part because it's important, but they value the fact that we can actually help them get campaigns faster and understand the efficacy of those campaigns by closing the loop. And they would like to work with us to jointly go to a customer and say, see, if you advertise on our channel, your return on investment is much better. So that's as it relates to that side. Same thing with the agencies, because the agencies are partnering with us to say, we need more automation, we need more technology to help deal with how AI is going to impact marketing spends. Let's partner with you. And so that's why, partnership with Publicis or WPP accomplishes that. I think on the model side, my take on the model side would be as follows, which is there are going to be 2 or 3 really large language models that actually succeed. All of these individual models that exist, small model companies in one part of a media ecosystem, I just don't see how long-term they survive because people aren't interested in just the model, they're interested in the workflow. And so for us, offering customers with that choice was actually very strategic because we can actually then provide for all of our creative customers the right model for the right case because these all have different brands. And so, I think as it relates to the support of all these models, I think it's a win-win. They would like access to customers, which Adobe has, and we would like access to these different models because they have different brand attributes. And, I think if you look at the larger companies like Google, we're actually with them and with Nano Banana, it's been a great partnership because we are providing them with a lot of customers and they're providing us with great technology. And so, and to some degree, I look at that, and I think I may have said that in my prepared remarks. I definitely look at that as I looked at, when iOS came along or Android came along or the browser came along, whether that's Edge or Chrome or Mac and PC, frankly, every single environment in which people want to engage is additive to the opportunity. And if we don't think it's additive to the opportunity, we're just unnecessarily ignoring that. So that's the way I look at it.
Thank you.
And frankly, you'll continue to see more partnerships. So stay tuned. I mean, that's something that we, continue to work on.
Thank you. We will take our next question from Brent Thill with Jefferies.
Thanks. The dampening of ARR with new freemium offerings, I guess what gives you confidence in the backside that you can monetize this?
Yeah, so I would say, first of all, we already are monetizing it. You see the momentum we have with Express. You see the momentum we have with Firefly. And we've got a long history. Acrobat, I think, is the first freemium funnel around software, and it's one of the most performant parts of our business. And so we feel good about the journey we've been on, which takes a large surface area of highly engaged users, takes them on journeys where they dive deeper from a feature functionality standpoint, hit paywalls, and bring them down the funnel. And once they are paying customers in these freemium models, and frankly, this is where customers' preferences and behaviors are going. They want to try before they buy. And so it's meeting the customers where they are. But we've got an incredible ecosystem that's pervasive. And once they become deeper customers around those freemium entry points, the opportunity to more deeply monetize that over time with a well-worn motion around upsell and cross-sell is one of the historical strengths of the company and will continue to be. So we feel confident that it is on strategy, meet the customers where they are, allow them to engage in the way in which they want to engage, and then continue to bring them deeper into the Adobe ecosystem, which becomes an effective monetization lever over time. So we feel good about the strategy and how we're executing against it.
And Dan, one quick follow-up just on capital allocation. From an M&A perspective, I know you backed off quite a bit, but the environment's changed considerably where other large companies are feeling things are easier to get done. Have you shifted your view at all on the buyback versus M&A?
Yeah, I don't say there's a change in our philosophy. We've always said there's three elements to our capital allocation strategy. First pillar is to grow the company, grow it organically by investing in game-changing, category-defining innovation, but also complement it from time to time with inorganic activity. Then maintain a flexible, strong balance sheet and return excess capital to shareholders. That framework is standing the test of time. We've announced SEMrush, great asset, great acquisition, complements the business well, and allows us to engage from a brand visibility standpoint in an evolving environment where you're layering in LLMs next to search engine optimization, and we'll have the industry's best leadership category-defining products. And so we continue to look, but we won't be, cavalier about M&A. We've got great innovation in flight. We've got an organic engine that we're pleased with the innovation we're bringing and the strategy that we're executing against. But we continue to look to see how we complement that organic growth engine with inorganic. And the bar is going to be high, but when we see something that's interesting and attractive, we will absolutely go out and action it. And so I would say there's really no change to the approach, Brent.
Great, thanks.
Thank you. We will take our next question from Michael Turrin with Wells Fargo Securities.
Hey, great. Thanks very much. Appreciate you taking the question. This one's for the broader team. The company is still delivering greater than 47% operating margin. It's an impressive number, but the net new ARR number was down a touch this quarter. So I'm just wondering what the team's thoughts are on potentially taking margin down to grow faster. It's a question we're getting from investors across software. So is that something you think you could do with some of the newer revenue streams and engagement levels you're seeing? Or maybe talk to us around how you're evaluating the trade-offs there, just given the current environment. Thanks very much.
Sure. I'll start, and then we are always looking to make sure that we spend money to drive long-term value. And on some of the businesses, namely, I would say Firefly and Express, you're absolutely right, which is the more marketing we spend on it, the more with our data-driven operating model, we continue to see it. I think you'll see as it relates to the Q2. There's a slight degradation that has as much to do with, the summit and the other events. But, maybe what's not well understood is how below the surface, we're actually constantly getting more efficient as it relates to our spend and making sure that we spend that more on marketing as well as on the COGS associated with what's happening. So we now track tokens and, token usage within the company, and it's nice to see that token usage increase, because that means that our AI products are seeing great value associated with it, and we will continue to do that. We will continue to do that, and given we have the best customer experience orchestration solutions, we know where that ROI is helpful and where that ROI can be wasteful. But it's a good question, and be assured that we're spending on the newer initiatives, and that's why tripling that revenue. And you're right. We will continue to see how we can accelerate that as well. Given that is the last question, maybe again, in summary, what I would say is that as it relates to our business, strong start to the fiscal year, And as we think about where the company is focused, namely AI products and ensuring that at the user level, we continue to see accelerated acquisition and usage, and on the enterprise, making sure that we combine the power of our creative tools to enable them to accomplish their business objectives with customer experience orchestration. We feel really good about that. So thank you for joining us, and hope to see all of you at Summit. Doug?
Thank you, everyone, for joining.
All right. I want to clap that it's over. I mean, I don't even know if they knew what they were talking about. If you're the CEO of a company, I don't care if you're leaving or not, your stock continues to go down. There's a clear freaking narrative. There's a narrative. The first thing that I would say in that situation is the narrative is wrong. This is why we're growing double digits. This is why the AI products that everybody believes is going to disrupt and replace us are not going to. Why would you not say that? They sounded like they weren't prepared and didn't know what to say. And what was like, why are there plugins for ChatGPT and Gemini and Claude? Why? I don't get it. The market hated this earnings. Adobe is down 7.5%. It is under 250. This is a company. Look at this chart. I'm sorry. You need to come out with a lot more firepower. This stock hit 600 in 2021. It was over 600 in 2024. I mean, how you come out with that earnings call? How? That was not bullish by any means. And I've been somebody who has been saying, I don't think AI is replacing software on the enterprise level, but Adobe is the one I am worried about. This was the earnings call that proved to myself this is why I was worried about Adobe. There was nothing in that earnings call that I thought was bullish. Not a single thing. Do the numbers look good? Sure, they look attractive from a value perspective, but they didn't give the market any reassurance or any reason to get excited. This is a stock that has been in a 2-year drawdown. And I don't know there's anything that they're going to do to reverse the sentiment about the narrative. And that's the problem right now. I would have also came out and said, we're doubling the buyback. I would have announced a bigger buyback also if they really believe that this is undervalued. I mean, your stock is down 65, 70%. How do you not double the buyback? There was nothing in this that was exciting. And get a different team to hold the earnings call. You need high energy, not putting people to sleep. You need high energy. I bet you every one of those analysts that were on the call only stayed on the call because they were in line to ask a question. I mean, That was brutal. I feel bad for people that have been in this because they didn't give the market a reason not to be fearful. That's the problem. Did Burry come out with a take on this? I know he bought it 9 or 10 days ago. Let me go to Cassandra's X. I'm not seeing that he said anything. I mean, of all the enterprise software ones, this is the one that he bought. At least by freaking CRM or Service Meow, not Adobe. Oh, hold on a sec. Hold on a minute. Did we get new pictures from Amit somewhere? Hold on. I clicked on freaking X and it reloaded. Here we go. Love it. Here we go, everyone. Eliano for the win. Amit interviewing Carp. And it says Amit is investing. That is awesome. Look at this. So proud of him. Absolutely incredible. This is incredible. With the bricks and everything. Absolutely incredible. So happy for him. He deserves all of it. This is so great. This is so great. Well, at least this makes up for the Adobe's earnings call. It makes up for it. This is freaking great. I can't wait to hear it. Can't wait to listen to it. This is phenomenal. Really is. I wonder when that's going to be out. Alex Karp and the brick wall. Yeah, Mitt's been working at that for a long time. Something's in my freaking eye. Good for him. Good for him. So at least we got good data out of Robinhood. And Amit is interviewing Carp, and it looks like he's having a great time with his bricks. Love it. My hair dries like this, everyone. It just dries like this. I don't know what to tell you. I don't think Adobe's going to bounce. I think this is... I could see this going lower, and I know how much lower can it go. It's trading at 11.5 times earnings. I get it. This is not momentum that you want. This is horrible momentum. And they didn't do the biggest thing that they had to do today was kill the narrative that they're being displaced. That was their only job. Obviously, the numbers have been good for a long time. The numbers wasn't enough. You needed to sell a narrative. They didn't. I don't want to say it, but I would not be surprised if this goes between 200 and 225. I would not be surprised. Well, we will see what happens. All right, let's do a final count. Not good. Crude, 97.51. It is up 11.76%. It keeps going up. They should double the buybacks. I don't know why the hell they're not. They absolutely should. Unfortunately, I think that we're going to have a down day tomorrow. I think we're going to have a very big down day tomorrow. Oh boy. All right. So next week, we got a lot of data. Wednesday, March 18th is a critical day with PPI coming out. Thursday, March 19th, initial jobless claims for the week. We'll see what happens with PPI. And we got to see what happens with oil. This is getting bad. Yeah, futures don't look horrible because the Dow is down 700 plus today. But it could go lower. We'll see. I mean, look, the reality is if you're young, this is what you should want so you can keep putting into index funds because you're buying at a better price. Like that's the only thing that is remotely exciting is that if the market goes down tomorrow, when we buy on Monday, we're getting it at a better price. I'm not buying puts, and here's why. I don't need to support anything with puts. To me, I'm not a trader. That's a waste of money. I'd rather take that and throw it in the S&P because I have 20 years before I need that money. So that long-term money, I'm not going to buy short-term insurance on long-term money. And the positions that I'm in, I want to own more of. So instead of buying puts, I would just buy more. Like if I was a trader, I would have a completely different strategy. I love that. I'm old and I have a chance for a better price because I plan on getting older. We should all plan on getting older. I love that. I do like Altria, but I think the easy money's made on Altria. Well, we've all been here for a while. We're going to call it. Oil is trying to get it to WTI is trying to get to 100. Brent's over 100. We're going to leave it at that. Amit will be back at some point tomorrow. I think he's back for the close tomorrow. We will see. I will call Ned Flanders and see if he wants to do something tonight. I doubt it, though. But happy to step in for Amit. Happy to entertain everybody. Thank you for sticking with me to listen to that horrible Adobe call. It was absolutely horrible. And I will be back at some point either tonight or tomorrow. Appreciate it, everybody. If I don't talk to you today, I will see you tomorrow and have a great rest of the night.